is with us now. Dubravko Lakos. He is head of global market strategy, JPMorgan. It's good to see you, man. Welcome back.
Good to see you. Thanks.
So we began our show talking about this big appetite for risk, partly on the idea of American exceptionalism. Trump 2.0, our economy is going to grow unlike anybody else in the developed world. It's already been so remarkable relative to others. You're going to have tax cuts, deregulation. You're going to pour more gasoline on what is an already robust fire burning underneath this economy. You mentioned it as well in terms of U.S. exceptionalism within your note, but you have one of the lower price targets on the street. Square that for me. You're looking for only 6,500 next year. Why?
So I think the story remains a positive one, and especially for the U.S. I think rest of the world, we need to see how things shake out. Strong dollar, higher for longer. Trade uncertainty. I think there's a lot of question marks we have around emerging markets and even various segments within Europe. For us, the big theme for next year is one of dispersion. And to me, that means a lot of different types of rotations within the market, which means that you don't necessarily have to have the big four, the big five, the big six sort of leading the way up. And that's why we see upside, but we see a bit more of a broadening in terms of leadership. And that's why to us it's a positive story, but just I think the upside is a little bit more capped in terms of the big cap names, but we do think there's a lot of opportunity for some of the laggards to re-rate higher.
Well, what do you think this last month has been about then, where the NASDAQ has once again distanced itself from the pack? It's up 8%. I mean, it's crushing everything else.
So I think since the summer of this year, you've had a broadening in leadership. And now you had a bit of a reversal. So again, I think that basically what's happening is every sort of 3 to 6 months, you'll have these reversals that are taking place. I think Tesla is obviously the center of this reversal here, and I think is driving a huge percentage of the move in the Big Ten. But I think as you sort of think more broadly about 2025, I think there's a lot of opportunities outside of the Big Ten.
Why aren't people going there now then in anticipation of all of that?
I think it's just Momo. Just some of it is retail participation with respect to some of these names like Tesla. So for instance, we see a lot of option activity within a Tesla. Broadcom is also something where we've seen a lot of retail participation. So momentum, I think, builds, and then I think it starts to spill over into other areas.
But I mean, it's certainly far more than just Tesla. Now, as you said, the percentage gain from the election for Tesla is unbelievable, but it's Amazon hitting a new high every day, every other day. Alphabet, new high every day, every other day. NASDAQ at all-time highs every day, every other day. Money continues to want to go there. Even when people suggest the broadening is going to happen, it's going to happen, and it does. It just doesn't last long enough.
So I think there was broadening into the election and briefly after the election, and I think the momentum crash, in other words, this broadening was pretty sharp. So I think you're just basically seeing some reversal of that. And I think as you sort of go into January, I wouldn't be surprised that you see some degree of bottom fishing that I would call. And in fact, when you look sort of historically, the value factor tends to do actually quite okay early in the year as people sort of place their bets elsewhere. So I think, I think the broadening trade or the dispersion trade that I would call is something that still has room to run in 2025.
But why you want to sort of swim against what is a really strong tide in terms of being underweight discretionary? When you mention what Tesla's doing, I mentioned what Amazon's doing. Tesla and Amazon are essentially carrying the entire discretionary sector. But if that's going to continue, why would I want to be underweight that area?
So I think discretionary is a funny one because it depends how you sort of define discretionary. And I'm not sure that an Amazon just sort of checks the box of discretionary. There's other sides to an Amazon.
But that's where it is, though.
It is, right. But I'm thinking discretionary more in terms of the traditional discretionary retail consumption-related stocks. I think that's the area that, to us, just doesn't have the best risk-reward. And there are some exceptions, like the airlines, where we as JPMorgan remain very bullish on. But there's other segments, I would say, of the market, including financials and banks, that we think have more upside, that are more isolated and more sort of protected from potential tariffs and trade uncertainty.